Alright everyone, so welcome to another episode of journaling my trading process, and this should be episode I think 11 or 12. And sorry for the way I'm speaking, guys. Ordered food and I've been waiting for the food for quite a long time now, so it's already kind of pissing me off. So like just kind of annoyed now, like this, like it's so annoying. Like you ordered food like since morning, like, but it's close to afternoon. Let me just say afternoon, and this has been like close to two hours. I think it should be up to 2 hours now. Like, and they said it's still not yet done. Like yeah. So back to the business of today. So welcome to Fortrade official, and one of the things I do on this channel is to share my trading experience. Yeah. So one of the things I realized again is that keeping things simple sometimes is the best. What do I mean by that? Is that my trading, let me use my trading because I believe that's our main focus. Because some of these lessons I learn, sometimes some of these things I learn, I try to find a way that I can apply it in other aspects. Yeah, on other aspects of my life, not just trading. Because one of the things we realize about trading is that the way our outside life is, the way our life is apart from the charts. You understand? Like, if our life is having issue, is the way it can reflect in the charts. I believe we know that already. So keeping things simple over complexity does not really. For example, strategy. Having a set things which you are looking for. Let's say, for example now, if you are trading ICT, I'm just using that as an example. And let's say, you just decided, I said, okay, what are my main focuses? My main focus is when I come to the market, first of all, I am looking for draw on liquidity on the higher time frame. Then after that is when once I have my draw on liquidity, then I am waiting for section to open. Once section open, then I'm waiting for a sweep of liquidity. Once I see a sweep, a change of state of delivery, and then I see a PDRA, and then I enter. So keeping it as simple as it can be, not having because sometimes our brain, when we have to make different decisions at the same time, then we are more prone to make mistakes. And then I realized that keeping things simple can also it's also like things like revenge trading, over trading, and all of that. So do you know why? Because if I have a specific thing I am looking for in the market, then when I come to the market, when I don't see that thing, then I shouldn't trade. But when I don't have what I am looking for, that is when I will come to the market, and then I'll begin to look for setups where there are no setups. So it's really dawned on me that really keeping things simple, even risk management. You said, okay, this is the percentage I should be risking. This is the percentage I should be risking. And then it doesn't matter the account size, whether it is $10. Let's say, for example, now I've decided that I want to be risking 10%. It doesn't matter the account size. Is it $10? Is it $100? Is it $1,000? Is it $10,000? Like, it doesn't matter the account size. Like, do you get, like, this is the percentage I am meant to be risking. You get, and that saves for and for example, even though, because sometimes even though now I'm giving, all of a sudden I'm giving a capital, an account size which I've never handled before. First of all, at least it will reduce the level of emotion. What do I mean? Okay, my percentage risk now on this account size is 10%. Do you see that I don't need to be cracking my head and be thinking, so if it is a $1,000 account size, then 10% what is $100. I'm just giving that as an example. You can decide, okay, 1% or 2%, any whatever account size at all. This is the amount, this is what the percentage I am risking on that account, 2%. So even if, let's say you are giving a $200,000 account size to manage, apart from you, there's a tendency to become overwhelmed. But because I already have a system of the amounts I am risking, I am only allowed to risk whatever account size it is. So the $200,000 account size, 1% is 10% is 20,000. So 1% is $2,000. So no matter how the emotions pushes and moves me, I'm only allowed to risk 2%. So, and this is because of keeping it simple. So from now on, I believe that's one of the key things I'm going to really be working on, especially this 2026. I'm really going to be working on keeping things simple. I realize that it makes the process easier. Like, imagine the amount of things we can drop. Why? Because the foundation is already on the basis of simple. Like a lot of things don't need to be too complex. That's one of the things I realized. And in other aspects of my life, I began to find a way to implement this, and I began to realize that initially I thought that they needed to be complex for me to be able to handle bigger things, for me to be able to scale them up. But I now realize that they are the foundation, are the roots. If I can keep it simple, then I realize that it is now easier for me to lay higher blocks, to stack higher blocks on top. So it is now easier for me to lay or to stack higher blocks on them. It is easier. Why? Because at every point when I want to make a decision, it is like, like there's something in programming. There's something in programming that's called, what is it called again? Like a block. When like you giving a command to the computer. So you said, like in Python, where you have something we call if statements and all those things. So if this is this, then this should happen. But if not, then this should happen. So like that, like a way whereby when I want to make the decision, this is what I should do. But if it does not happen like this, then this is it. But when I don't have a system and structure, it's already put in place. That's when I have to make different decisions and then end up making mistakes. So this is not just only going to apply to my trading, but to other aspects and even my finances too. Like my finances in general, because my finances goes beyond just trading. Trading is not just the only thing here. So finances goes beyond just trading. You get, so keeping things simple, keeping it simple. So this 2026, this is one of the things I believe I am really going to implement and work on. Because like you can see the irony. Like, keep it simple. You make progress faster. But try to make it complex, then we just end up slowing so keeping things simple. It doesn't always have to be too complex. You get, sometimes I want the strategy to sound sophisticated, So I feel that if it doesn't sound sophisticated, then I am not portraying myself as a good trader. But then that is not the case. That is not the case. That is not the case. Because there are a lot of traders out there trading maybe support and resistance, and the support and resistance might not even be too complex at all. But they are pulling out money, thousands of dollars, some even millions of dollars. They are managing large funds, depends on whatever stage they are. With that. So but the key thing is knowing what I am supposed to do when I come to the market. When I'm doing my analysis, I know what I am supposed to do. Keep it simple. Managing my accounts, risk management, I know what I'm supposed to do. Keep it simple. And then psychology. So one of the things I feel it doesn't need to be too complex. I feel that it doesn't have to be complex every single time. There are times whereby simplicity is actually the answer. So thank you so much for staying to this point, and I'm going to see you guys on our next video.